Take a look at the tech sector here. It has potential here, a little bear flag pattern. That is a bearish sign. It is pointing to it another big leg down. And once it breaks into a downtrend, the markets, I think, are naturally going to go down. It's going to change the bias, I think, pretty quick. I think, it's going to pull the markets down right away. It'll definitely pull them down. And once people start to panic out of the tech, then we're going to see the markets collapse very, very quickly. And the small caps will probably just get annihilated.
Chris Vermeulen is back. He is the chief market strategist at thetechnicaltraders.com. What's going on with the markets right now? There's a big rotation happening, it seems, and we'll be talking about how the markets have reacted to the assassination attempt of Donald Trump. Welcome back to the show, Chris.
Hey, always a pleasure, David. Thanks for having me.
Let's start by talking about today's market moves. We're speaking on the 16th of July. The S&P 500 is more or less flat. The NASDAQ is more or less flat. Gold is up 1.4%. So we'll talk about gold today. It's been ripping higher the last 2 days. Bitcoin's also been ripping higher. It's up another 1% today. It's 64,000. It was below 60,000 before Sunday, which we'll talk about, but it's just been going higher. Another big news item, which we talked about offline, is the fact that the small caps are going up a lot. And importantly, you and I spoke a couple of weeks ago. We can revisit the last interview. We talked to Chris link below in the description. We talked about how the other 10 sectors of the 11 sectors of the S&P 500, 9 of them have been lagging behind the S&P, with tech only being the only outperformer. And what happened was now in the last 2 weeks, all the other 10 sectors have been catching up with the S&P 500. So I know that was a big overview. What's going on with the markets? What are your thoughts?
Yeah. There's definitely a lot to cover. If we take a look at the charts real quick, we can see the SP 500 here. It really is kind of stuck in this tight little wedge. It's not really budging to the upside. And when we look at the NASDAQ based on, it's got the big techs, it is definitely struggling. It is stuck kind of in this sideways pattern. And what we're seeing is, I think we're seeing rotation into the small caps. If we look at the Russell 2000, which is a very good barometer of the small cap growth, it has just exploded to the upside with volume. And I think this has to do with a few different things. Possibly it has to do with Trump. If he gets in, he's talking about tax cuts. It's going to help small businesses huge. So I think we're seeing stocks pop on that. I also think we're seeing the rotation out of the technology space, David, as you mentioned, where we are seeing heavy volume in the Magnificent Seven. We're seeing the whole tech sector as a whole flatline and trade sideways and lower, while the small caps are going up. So we are seeing rotation out of the big mega caps and into the small caps. I think both of those things are creating this huge fuel, this big rally in the small cap sector right now.
Why do you think this rotation is happening now?
I think it's just a perfect storm. I mean, when we look at the Russell 2000, if we kind of just zoom back, it has been trading in this basing formation, this bottoming formation for a while, and then it's been holding up at the upper end of this range, just building a launch pad and a reason for it to spike and pop. And so we're starting to see that pop and breakout right now. Simply, I think just time has done its thing. This chart pattern shows it is ready to break out. And then we have the potential, the assassination attempt on Trump, which will probably get him elected. And if he gets in, it's going to help small businesses. And on top of that, we're seeing big volume selling in the tech, and it's big volume selling. So to me, it's institutions are starting to lighten up their portfolios, saying, "Hey, we got massive gains here. Let's start trimming back," because I think they're starting to see the music coming to an end. And a really interesting point is we saw something similar to this back in 2021, where the small cap space, the majority of aggressive stocks topped out in March of 2021. Well, small caps find this last little squeeze higher, and they kind of suck everybody in just before it goes for a huge bout of selling. And just take a look at the weekly chart here of the Russell 2000, and we go back to what happened. So I believe we're in this major topping phase, David, in the market. If we look here, I believe this is a major stage 3. We had a big pullback. We have this complacency move, and we're starting to see this squeeze higher in small caps. Well, very similar. We have a topping phase back in 2007, 2008. We put in a complacency move, and the Russell 2000, you can see this spike on the chart. Everybody got sucked in, and then it chewed them up and spit them out, and the market went the opposite way. So I believe, continue to get closer and closer. The small cap stocks, the news, the events are sucking people into this market right now. The VIX is low. It hasn't been this low or stayed this low for like 30 years. That somebody just told me something like that. I don't know what it is, but there's not a whole lot of fear in the market. And people are kind of piling in. So I
Could
just
it
think the
could it be?
timing's right. I think there's a lot of stars aligning for all this to come together.
Let's pause for a minute and take a quick snack break. Have you ever wished you could enjoy restaurant quality meals at home without the hassle? Well, let me tell you about today's sponsor, Cook Unity. It's the first chef to consumer platform that delivers freshly prepared, pre-selected meals to your door weekly. Cook Unity partners with award-winning chefs from across the US to bring you an at-home gourmet dining experience like no other. For example, you get this garlic butter chicken with broccoli made by Chef Tony Perez. Their meals are thoughtfully curated using real ingredients. There's nothing artificial. With options for every dietary preference, including vegan and gluten-free, you can enjoy a variety of delicious, inventive meals. Plus, the subscription is super flexible, allowing you to pause, skip weeks, or cancel anytime. The meals are delivered fully cooked, so all you have to do is heat them up. If you're ready to try it out, go to cookunity.com/David50 or scan the QR code here on the screen and use my code David50 to get 50% off your first order of Cook Unity meals. Let's just take a look here. Can we go back to the exact date when the small caps started ripping higher? Just want
Yes.
to see something here.
Let me go to the daily chart real quick, clean up the
Because
lines.
I think it may
They
yeah, sorry. Go on.
yeah, so they popped on July 11th.
July 11th. Okay. When was okay, there you see, look at that. June CPI report came out on July 11th. And that's when the CPI was down 0.1% on June as of June. The last month was down 0.1% year to year. It's now 3%, 3.3%. So I think the markets just reacted to lower inflation data. And on that day when inflation data came in, the chance of a Fed cut by September jumped to 80%.
Right.
So
Yeah.
I think we can. My theory is it was just reacting to a much higher chance of a Fed cut. Do you agree or disagree with that?
Yeah, and maybe that's what sparked my cursor's on it right now. You can see at the bottom on July 11th, the same day is when money moved out of the big tech. It
Mm.
was heavy volume selling among the majors. So I think a lot of stars aligned on that day, money moving out of the big tech, moving into small, good economic data. So yeah, it definitely was a alignment of stars that triggered, I think, a big pivot in different size stocks.
Look, I can understand why a Fed cut would be positive for small to medium sized businesses. I was talking to some guests earlier on my show this month, and we were talking about how 43% there was a survey done on Alignable reported by Bloomberg a couple months ago. Anyway, 43% of small businesses in America are not able to fully pay their rent, which is a huge
Wow.
statistic. And yeah, exactly. That's the reaction people got when they saw that. And the fact is, we need a rate cut to signal to these small businesses that their debt burden is not going to stay elevated forever, right? That signal is important. So I can understand why a rate cut potential is going to be good for the small caps, or mid caps. What I don't understand is why there would be a rotation out of tech if you have a higher chance of a rate cut. I mean, I guess in some way you need money to come
Yeah.
out of one sector into another if you think that the small caps are going to grow more, but is that the only reason?
Well, I'm sure there's a bunch of different things, but just looking at this chart, we have, generally when the market goes up, we're going to see bouts of selling. If you're in a bull market, the bull's going to try and buck you off, and those bucks are big volume pullbacks. We've had multiple of them, and they've all had elevated volume, stronger than above, average volume. We've had these, and that just happens over time. So I really think, we're just seeing this market. We keep seeing distribution days, a big day like that, where I think just big firms are locking in gains. And I mean, obviously, there's other data and news that might hit the same day, but I find a lot of times, if you just follow the price charts, you don't have to worry about the data so much. The key is just to identify these trends, make sure you navigate them. But to me, it was just a day of big profit taking with big institutions because it was heavy volume selling in a handful of mega techs. So it was very targeted and and there was a lot of volume, a lot of money. So to me, it's just money coming out of the market. And of course, wherever, if it's coming out of a pocket of the market, it's most likely going to go to another pocket, which it seems to be small caps at this point.
Well, how are you positioned right now? Are you more favoring the small caps as well?
We're not so much in the small caps. We're positioned long the SP 500. We hit a target recently. We're pushing higher. We're also along the Nasdaq. We got in about a month and change ago. We're almost up at another 10% target for that. So we're long the SP 500, the Nasdaq, and we also own Bill with a portion of our portfolio, which is a cash position that just pays us daily interest, a monthly dividend, because we've hit targets. And as we pull money out of the equities market, we put it safely in cash to earn interest and protect it until we have another fresh setup in the market. So we're long. I still believe this market is going to continue to go long. And our sentiment chart here, is showing orange bars at the moment. And orange bars typically mean people are betting on falling prices. They're scared. Typically, when we get these, the market is going to push higher. And that's what we're seeing right now. I feel like a lot of people are picking a top. We saw a big short squeeze in the triple S QQQ ETF not too long ago. It squeezed everybody out. And so the sentiment here is pointing to we should still see another push higher. And that's kind of what the charts are pointing to. And you got to stick with the trend until you're proven wrong. The important thing a lot of people don't get is you're never going to be able to get in at the bottom unless you're bottom picking. And I don't do that. We need to let the trend build. We get in, we ride it up. And what's going to happen is eventually the trend is going to move down and start to roll over, and then we'll get out over here. So we don't get in at the bottom. We don't get out at the top. We need the trend to start, and then we get out and we more or less lock in gains along the way and take that middle section is our profit. That's how I focus. But so many people don't realize you can't, you got to miss some in the beginning. You got to miss some at the end to make sure you don't get out of a trend too early.
Markets reacted by having the stocks and risk assets go up on Monday. I'm talking about the reaction to the assassination attempt at Donald Trump. Now, I know you don't look at specific news events. The price already factors in news, right? That's your whole, the basis of your analysis. But looking at that particular event, do you think it really changed market dynamics much?
I don't know because I don't really follow politics or how it really relates into things. I would think my gut has always been like if Trump gets in or everybody thinks he's going to definitely get in, I think it's bullish for the stock market, bullish for businesses. And so the fact that I'm seeing small caps take off, I think is kind of a bullish sign. The overall equities markets, as you talked about, most sectors, David, are moving higher. They're doing well. We've seen utilities, consumer staples, healthcare. They've all had a really nice pop recently, playing catch up to like the SP 500. Consumer staples looks like it's built this launch pad. It's ready to push higher. So, I mean, money is holding up and moving into these other sectors, while the SP 500 and the NASDAQ are now kind of stuck. And we're seeing the Dow and the Russell really pop and break out to the upside simply because the Dow and the Russell don't have the mega tech heavy holding them down. And when we look at just the tech sector, as you mentioned, the tech sector space, it doesn't look like much, but it has gone down and is trading sideways while the rest of the market is rocketing higher. And this little tech sector pullback has like anchored the SP 500 and the QQQ. It just doesn't want to go higher unless the tech moves.
I know we've talked about the stages. We're in a stage 3 topping phase. We've talked about that before. The stages, the cycles of, there we go. The cycles of stock market performance, stage 3 topping phase. I wonder how this analysis can be applied to a bifurcated stock market in the sense that the tech sector, like we talked about, has been pulling up the entire index, and now the tech sector is flat or if not down, and the rest of the index is going up, right? How does this chart apply to that kind of a market?
Yeah, so even when a stock market is topping or a stock market is even falling in a stage 4, there will always be a sector, a group of stocks that will buck the trend and do well. I mean, it's like finding a needle in a haystack. You never know which one it's going to be until it happens. So there's always going to be the odd one that's bucking the trend. The catch here is the tech sector is the one, and it's also the most powerful one. It's not like a little tiny gold sector that's rocketing and it doesn't even move the indexes. But the tech sector, because it's kind of popping and holding its value, does make it a little more difference because the market, I believe, is in the very late stages. It wants to roll over. It doesn't have a lot of actually power behind it for the majority of stocks. But the tech sector is kind of holding it. So we kind of need to let the tech sector fizzle out. When it finally stalls and rolls over, I think we're going to see the whole market kind of go down. And if we look at the rest of the stock market, I put this symbol up. This is small caps, micro caps, and equal weighted SP 500. And if we just kind of look at it, we'll just jump to the monthly chart. So this is kind of like, if you look at the stock market in terms of everything kind of but, tech heavy, we're not hitting all-time highs. We're in this kind of complacency move where the market's had a big crack to the downside, and now everybody's kind of getting sucked in and pulled into the market. I believe we're kind of on this last leg, this last pop of everyone squeezing in before we start to go off a cliff, whoops, and see a big sell-off. And that pattern, this drop in complacency move, is this stage 3 phase. And I say complacency because you and I've showed this chart before, is the emotions of the market participants. They believe the market's still going higher. The majority, they're invested long term, but they don't realize it's really just a bounce, a pause. It's a transition before we go off a cliff. Once we start to go off that cliff, there's going to be anxiety and denial, and people can't believe what's happening. And eventually they panic out and retirements are ruined. That's the wave that, we kind of go through. But I believe we're still in the stage 3, but the tech sector is kind of holding thing. It's anchoring the major indexes from breaking down.
Let's talk about gold. Gold is another asset that moved up a lot over the last couple of weeks, but in particular, the last 2 days. See that big move upward. That's a breakout. Is that a bullish breakout, or is that an overbought kind of an indicator? What's going on?
I would say it's a bullish breakout. That breakout is pretty similar to right here. I believe. I think this is the start of the next leg up. We have a rally, a consolidation, a rally, a consolidation. It's breaking to the upside. Gold miners have already broken their previous highs, so they're leading this charge, which is a good sign. I think gold is going to 2650. 2750, which is right about here, and then potentially right up to here. So that's the next leg to the upside. You can use Fibonacci extension for this to get the momentum. You can use just a simple bull flag pattern. Either way, it brings us right up to this 2750 window. And when gold hits that, I believe it will, then I think we could be very close to a major stock market top. Because if we go back in time and take a look at what happened, we had a multi-year consolidation in gold, and then everybody piled in just before the recession and financial crisis in 2008. And we've had the same multi-year consolidation. Everybody's now running for safety, just like they did over here. And then we're going to go into what I believe will be the next 2025 bear market, recession, crash, whatever they're going to call it, whatever is going to trigger it. And so gold will pull back. So I'm very bullish on precious metals. In fact, check this out. I just got this. My buddy had to move and get rid of it. So I just bought a 1,000-ounce bar of silver to take off his hands. And I'm super bullish on metals, both short term and looking forward like 5 years from now. I think they're going to go very ballistic in due time. So.
Well, I have to bring up silver then. Silver has been a bigger move than gold on the upside. And I know some analysts look at the gold-silver ratio as an indicator. Is that something you look at, the gold-silver ratio, to see which one's more undervalued relative to the other?
No, never. I never use it. I mean, everybody talks about it, but I stick to the price charts. I always know, if silver's not leading the charge up and hasn't gone parabolic, it's probably underperforming gold. So I just look at the charts. I mean, I think I do it in my head automatically. I don't have to pull up a chart to see it. But yeah, silver's very undervalued. It has been for a long time. It's starting to come to life. I think silver could go to 34, 36, 38 over this is the monthly chart. So the next 1 to 2 months, I'm still very bullish on metals. And I think silver's got quite a bit of upside, like 18% upside from here. Gold's got about 10% upside from here. So, I like the space. I do think they're both going to do the same type of thing in terms of right now, they're both in a run up phase just before a bear market. And silver pulled back 65%. Silver could pull back very sharply when we have a recession. And that'll be the last opportunity before I think we see like 50, 80, who knows how high gold will be, or silver. Sorry, it'll be one of these parabolic. I used to call them the golden rocket ships back when we used to trade them back in this time frame. You get into gold, silver miners, and man, did they ever go ballistic. I mean, life-changing stuff. So that is coming, but I think it's still many months out for that final push.
Bitcoin is something that we talk about sometimes, you and I. That has had an extraordinary move over the last couple of days. Let's take a look at Bitcoin. Yeah, again, it broadly follows the other asset classes that we've talked about. I don't know if there were micro reasons for Bitcoin moves. We can, we can discuss that another time. But right now we're focusing on the charts. So I think that this kind of looks similar to gold. Do you agree or disagree?
I agree. To me, I've never really been into the crypto space. I bought some many years ago. I don't even know how to sell it or buy more. I'm not a crypto guy, but I am finally actually really bullish on crypto, on Bitcoin, simply because of this chart. It's had its big kind of massive phase. It's chopped people up, put them through hell. And now it has come up and it's consolidating through these highs. You could argue this is a giant cup and handle pattern. Cup and handle patterns, if it is a true one, can rally 3, 4, 5 times the depth of the cup. So if you were to like stack that on top and keep going up, it's pretty ridiculous, the value. But if we were to look at it from just my more conservative view, using Fibonacci extension, we can go from the low down here, we can go from this high and to this recent washout low. We actually watched the shakeout on the intraday chart as this washout low happened with subscribers. We watched it on the minute chart and it flooded and we saw the orders get triggered and it got all the longs out who are going to get out at that point, and then it turned around and rallied. But this chart pattern here points to about $113,000 of Bitcoin if this starts to break to the upside. The first pause, if it rallies to 90 and has a pause or pullback for a month or two, then we're going up to 113. So there's a lot of upside potential. This is a very bullish chart pattern. It does need to break above the highs from a few months ago to really confirm that it's in a breakout. But this chart pattern is, a top-notch pattern. And I think we're starting to see this is a pattern that investors are holding and getting into it, and it's building a launch pad for another move. So, I mean, there's ways to trade it. You can buy Bitcoin, or you can just buy the ETFs based around it, which is the easier way. It's the only way that I know, other than going to Google to figure out how to buy crypto and not lose a key. It scares me.
Is there a downside floor for you below which it would be an obvious bear pattern?
Yeah, let's just drop down to the daily chart and get a little closer look here. If we zoom out, if it was to break probably this low over here, this 53 900 level, that was where we saw the flush out. So for example, if I was to take this low right here, we watched it come down on this day, and then we saw it trigger intraday, and it just triggered a high volume, a bunch of stops. So this is like a very significant washout low. It's also kind of right across the top of this little bull flag pattern here. So to me, I think if it was to close below there, probably on a daily, maybe a weekly chart, this is a big pattern, a monthly pattern. You might want to, a weekly close below it would probably be a pretty bearish sign. But this is what we see. Like right here, we've got a bull flag pattern, and you can see how it can take off after that. That is what the big chart pattern here is doing. This is the bull flag pattern to the upside. It rallies up, it flags, and then it's going to skyrocket higher. So I really like it. It is still in this pattern. It hasn't confirmed a breakout yet, but it definitely has all the characteristics that it is shaking out the longs and it's putting in its time to go higher here.
Chris, overall then, what is your positioning and sentiment in terms of risk? Are you seeing this breakout in the small caps as a signal to I guess, take positions on either the neutral or short side? I don't. Well, I guess you don't short, but are you seeing this rotation as a selling indicator or a buying indicator or a hold indicator? Is basically my question.
I mean, we're long the markets. We're staying long the markets until it proves us wrong, until the trend changes. This to me is another one of those early warning signs, just like we saw small caps rocket higher and everybody piled in just before they tanked. I feel like this is another one of those waves where everyone's kind of piling in. There's really very little fear in this market based on the VIX, the put call ratio. Also, everyone's buying call options. Um, I feel like it's just the kind of one of these final squeezes where everyone has now been officially sucked into the mega large caps, the big tech. We saw record flows 3 weeks ago into that space. So the masses have gone into tech. They all just paid a premium. Now they're starting to stall. And now we're starting to see money move into the small caps, and it's sucking in the small caps traders and the aggressive people who are going to get positioned potentially just before we go off a cliff. So to me, this is a big warning sign, but it doesn't mean I take action. We are long the markets, and we need the markets to reverse and confirm a downtrend before we get out. So I'm expecting weakness anytime here, but we're going to continue to ride it up until the indexes tell us otherwise.
Chris, we talked about real estate last time. We can revisit that interview, by the way, with Chris. Link down below. We can revisit real estate again. But I want to just, before we talk about real estate next time, just today, let's talk about the home building sector because home building activity has been slow. Rising inventory levels have hit the US. And from what I've been told by real estate experts that I've talked to on my show, selling transactions overall volume has also been low. In fact, at a recessionary low, I've been told by one economist. And so, if you factor in, I guess, your outlook for either the economy or the real estate market or both, and how home building activity has slowed, what's your take on the index? It just seems to be going up, so that's why I'm just a little bit confused here.
Yeah, so there's a big difference between like home builder. These are stocks. Remember, these are companies, and the reason it's
Yeah,
going up is because investors are feeling bullish right now. Hence, they're piling into small cap
right,
aggressive stocks.
right.
So it doesn't mean the housing industry is strong. It just means people think it is, and they're buying the builder
Well, that
companies.
that's it. That's my confusion, right?
Okay.
Because yeah. So that's yeah. Let's talk about it.
Yeah, so that's the scenario right now is people are getting sucked in and buying into real estate stocks. The reality is, or what I see from all the different data, new home building starts for into single family homes and multifamily, pricing across the board, even in my area, has come down. We went from like 80, roughly 80 homes for sale. Now there's over 600 and change. The sale price has come down on average. They're just not selling. They're taking forever, months to sell now. So to me, the housing industry, it might be at recessionary lows because it's slowed down, but I think it's really just the tip of the iceberg. I mean, I think we're going to see the housing market still go off a cliff. I don't even think it's even started. All it's done is it's softened and stalled. It hasn't really fallen yet. So I think there's going to be a lot of downside pain, but I don't think it's going to happen right away. It's going to be a slow bleed out. Real estate and mortgages are a much longer process, typically happens through the bear market in equities, and it drags out for another year or two, or even more sometimes after that, because people naturally, where they start to run out of money, they stretch their limits with credit cards, which we're already seeing credit card defaults start to skyrocket already. The mortgages and the rents are generally the last thing that they want to give up on because they don't want to lose their house. And so it gets delayed the most. So I think we're working our way there. But to me, real estate is going to be in some serious trouble. And you and I touched on it. The IYR ETF is a good idea of what the real estate industry has done. We touched on our last talk where we have a big blow up move before the major recession, and then it sells off and has a pause, and then we go into a full on recession. Well, we've had the same thing. We've had a blow up, a pullback, a consolidation, and I believe real estate is going to stall out here and go for another big tank. But this is, remember that I believe there's about 50% downside in IYR over the next year or two. But it doesn't mean real estate homes themselves are going to fall 50%. Again, this is an ETF, and the reason it moves so much is because investors dump their shares and they drive the price down even quicker. It doesn't mean home prices will fall 50%. Just these companies who own real estate, their share prices can get hurt more than the actual real estate underlying itself.
Final question, and I'll let you go, Chris. Great talk today. Thank you. Now, this rotation out of tech, at what point does tech get brought down enough so that it brings down the entire index?
Well, I think we just needed to start a downtrend. I mean, once it starts trending down, even like if it was to take a look at the tech sector here, it has potential here, a little bear flag pattern. These are inside bars, meaning they're inside this big red bar. That is a bearish sign. It is pointing to it another big leg down, potentially tomorrow or the next day. And once it breaks into a downtrend, I mean, the markets, I think, are naturally going to go down. It's going to change the bias, I think, pretty quick. We still might see some of that flow into small caps and mid caps. But I think that could only last maybe a week or so, and they might only be muted. They might not go higher. As soon as this turns into a downtrend, which we're still potentially a week or two away of weak lower pricing before it confirms a downtrend, I think it's going to pull the markets down right away. It'll definitely pull them down. And once people start to panic out of the tech, then we're going to see the markets collapse very, very quickly. And the small caps will probably just get annihilated. They move up fast, but keep in mind they move down even faster. So a pop of everyone moving in on a bunch of good news colliding at the same time can be wiped out, in a day or two, in the small cap space.
Chris, thanks very much for your time. Tell us about your work, where we can find you, what we can learn from you.
Yeah, sure. If they go to thetechnicaltraders.com, you go to my website, get on my free newsletter. I share my daily video analysis like you and I are doing right now, right on a daily, really granular level of all the different assets. And you can always go to my YouTube channel. I've got videos that I share here as well. And David, I got a thing set up here. If people go to thetechnicaltraders.com/David Lynn, anybody
Nice.
who joins, I will send them a gold back as a bonus before gold really takes off. So you got a piece of a real asset there if you want to do that.
Yeah, yeah. Thank you. You've set up a link for me, for my audience in particular. So click on the link down below if you want to learn more about Chris's work, and and you may potentially get one of those gold backed notes. It'll be cool if we can actually start using them in everyday transactions. But for now, it's kind of just it's a souvenir. I've gotten those before as a gift. But you could go to the bank and actually convert them, right, for fiat. Is that like
I'm
technically?
not sure, but I was out for dinner with some traders who use silver rounds to fill their car up with fuel at a
What?
gas station in my town. I have no doubt you'd be able to do something with this because I mean,
Wait a
they
minute.
have the exact weighting
So
and
hold on.
everything on them
Somebody
still.
used silver to buy gas. Is that what happened?
Yep, yep, yep. Because we had the internet went out. This was a while ago, and I actually had dinner with them on Saturday night. And yeah, we were talking about that story, how we both went in town to use the internet. He couldn't pay for fuel, and the gas station people took two silver rounds, and he topped his car up with gas. He's like, I've been waiting to do that my whole life. He's a gold
Wow.
bug. But it just goes to show, man, the internet goes down. You better have a gold bill flipping around in your wallet so you got something to buy milk and transportation or fuel or bullets or something.
When your friend didn't have cash on him, we're like, what was the deal?
Yeah, no, who carries cash? I never carry cash.
Okay, yeah, fair enough. Okay, he doesn't carry cash, but he carried silver coins with him.
He had them
I
in his
like this
glove
guy.
box. He always keeps them there for emergencies.
Okay. All right. This is an interesting town. Chris, welcome back to the show. Always good to see you. We'll see you again soon.
Thanks, David. Take care.
Stay tuned for more coverage. I'm David Lynn. Don't forget to like and subscribe.